Everybody, thank you for tuning in today. We've got a busy morning actually. We've got a change of speaker. We're actually very pleased to get hold of Paul Niven from FT Investment Trust. But before we get there, then I and Richard will be running through some of the week's news, and then we've got something else to announce at the end. So please do stick around. So news first. Three bits. So I'm going to look at Chrysalis and Downing, and then Richard's going to talk about Aberdeen property income. So Chrysalis first. These are charts from the AIC. Actually, our website's not quite working at the moment, unfortunately, and we are battling to get that fixed. But there we go. So the share price has been improving, and it's actually quite pleasing that it has been sort of recovering, despite the fact that it's had some setbacks. So obviously, when it broke down WeFox, that was a big negative. But nevertheless, the sort of movement has been encouraging. There's been lots of announcements that have been helping with that regard. This week, they've said we've put a 2-year 70 million credit facility in place. They can actually make that bigger by £15 million. There's an accordion facility too. And they're only going to use that to help accelerate the returns to shareholders. So it's not a permanent gearing facility. That's not the idea. It won't get more than about 8% geared based on what we've had at the end of June NAV. They've already got £45 million worth of cash. They've got some shares in Wise left, not very much those now, but £1.9 million worth. So we can start thinking about then getting going on the buyback. But then the situation has been vastly improved again this morning because they've sold Featurespace to Visa. They're going to get, the fund is going to get £79 million up front, and then another 10 million deferred consideration. We're not quite sure what the timing on that is, and we'll consider what the conditions are. But nevertheless, that is really quite encouraging. If they've got 89 million for it, that's a 20% premium to where it was valued at the end of June. That would add 2.5p to the NAV. And it also would be 3 times the amount of money that they've invested in the company, which is quite impressive, I think. That gives them a big chunk of liquidity. 195 million is equivalent to about 38% of the market cap, they say. And crucially, the announcement says this has allowed the company to begin the process of returning up to 100 million of capital to shareholders. So we should see buybacks fairly soon. I hope they're going to do it through buybacks. That would be the most sensible way of doing it. So just mop up the overhang quickly. Then the discount can start to narrow, and then they can start thinking about tenders and things. But buybacks, I think, would be the sensible way forward. We'll see what they do. Downing, this, I just don't understand why the discount is as wide as it is. You can see what the NAV's been doing. It's just been sort of marching up and up and up and up. We know that there was a bit of a sell-off around the start of the rise of interest rates, but it was entirely unjustified, I think. They have put up their discount rates. So that's been holding back this NAV appreciation. And then as rates start to roll over, that should come back into the NAV again. So this should further pick up again. It's a decent yield, 7% yield, but this is as much about the NAV appreciation, the total return, as it is about the yield. What they've announced this week is that they're selling their Swedish wind farm. They're going to get, again, slightly more than NAV for it, which is very encouraging. It just shows that the NAVs are reasonable. This little chart here is showing you how they've added value to it. So they're selling it for about 50% more than they paid for it. The asset performance has been good, and that's partly helped by the fact that they've put a new O&M, operations and maintenance contractor in there. They were able to renegotiate their insurance, and that saved about £1 million. They got a 5-year life extension and a longer lease term on the land that it sits on. All of that added the £5.5 million there. They invested some more money into it. Other bits and pieces, so the macro and stuff will help too. And they've already had £2.7 million flow off of this thing, so they're actually getting a decent return on it. Again, the money is going to be used sort of to initially to pay down the credit facility. So I think that's going to wipe that out. It was 22 million euros, so there's more enough money to do that. They've got more stuff to do for the hydropower portfolio. So they just announced that they bought another 3 Swedish hydropower plants on one river in the last set of results that came out. They've also got this one investment in Iceland. It did say hydropower portfolio, not Swedish hydropower portfolio. So I think they might do more stuff in Iceland as well. And then also they've got the bits and pieces that they're doing in terms of putting batteries next to those and upgrades to the systems. All of that is potentially quite lucrative for them and would push the NAV up higher again. But they also can buy back stock, so they're looking at doing that as well. And with the discount where it is, that's NAV enhancing too. So all of that, I think, means that this is definitely the right price. Now I'm going to hand over to Richard for a bit. So I think, Richard, I'll continue to drive, if that's all right.
Okay. All right. Thank you, James. Yeah, so there's been a successful sort of conclusion to Aberdeen Property Income's managed wind up or wind down today. So this is the chart. It's sort of quite familiar with most of the listed real estate companies. Sort of end of 22 took a massive hit with higher interest rates, and then shortly after that they had a bid from Custodian Property Income REIT, and if you just go on to the next slide, James, which sort of made it was unsuccessful in the end, but it made the board think about what they wanted to do, and they proposed a sort of managed wind down, which got voted through by shareholders. And this week they've agreed a deal to sell the whole of the portfolio apart from one sort of land holding they got for £351 million, which is, I think, quite a good outcome in the end for investors. So it's an 8% discount to the valuation at June, and it implies a NAV of about 64p, including the costs of doing this deal. So we look on the next slide. So 64p, that equates to a discount of the NAV of about 12%, just under 13%, but a premium to the share price yesterday, and a massive 20% premium to the share price when the managed wind down was approved. But also, shareholders would be thinking, well, how would this compare to if they did put through the merger with Custodian? So it's a 3% premium to what the original price would have been, or 62.1p. But after that, you might remember, after the deal was announced, the merger was announced, Custodian share price sort of fell off a cliff. At one point, it was valuing the deal at 50.5p. So it's a massive premium to that. Obviously, there would have been a price recovery if the deal had gone through. I would have thought, who knows how long that would have taken. So I think this is sort of good outcome for API shareholders. And just a bit on the buyer, which is quite an interesting. So sorry, I'll just sort of go through the rest of the bits on the next slide, James. So yeah, it's due to complete at the end of November. Return of capital to shareholders through voluntary liquidation. Further costs will be applied to that. I'm not sure how much that will be. The third quarter dividend will still be paid. And then this land that they bought in Scotland, it was originally for sort of offsetting the carbon from their portfolio. So that's not part of this deal, and that's being separately marketed. And that's valued on the books at about 10 million. So they've still got that to work through as well. And then the buyer, on the next slide, is quite interesting. So it's Golden Tree Asset Management, which is a US firm. It's got 55 billion under management, but they're being advised by Farron Investments, who are taking a sort of minority stake in this deal, and they're going to asset manage the portfolio. But that's the team behind LXI. So it used to be Alvarium Management, and they tried to launch Special Opportunities REIT earlier this year, but didn't get that away, and they've obviously taken that to the private markets, and this is their first sort of venture. So that's quite interesting where that's ended up. But yeah, like I said, quite a successful outcome for API shareholders, I believe. And yeah, not one bites the dust.
Cool. Thank you, Richard. Sorry about my slide control there, all over the place. Actually, I looked at online that far radio thing, piece of land. They're marketing that at £12 million, and they only paid 7.5 for it. So I think that just shows you again what good managers the API lot were. I think it's a shame that this one's going, but there we go.